Yo, it's your boy Felix, and welcome back to another interesting episode on Top of FX. And today I'll be analyzing the Ethereum against the US dollar. So without further ado, let's jump right into the charts. So the first thing I always do is to go to the highest time frame, because at the highest time frame, this is where the banks paid attention to. And secondly, the high time frame gives me the overall picture, the behavior, and the direction of the market. So there are only three phases you can see the market. Either the market is making higher highs, higher lows, or the market is making lower lows, lower highs, or the market is moving within a range. In this case, the market has been making higher highs, higher lows. This was a high, this was a high, this high is higher than this high, this was a low, and this is a low, this low is higher than this low, this high is higher than this high, this low is higher than this low. So the market is making higher highs, higher lows. So it's safe to say we're in an uptrend. So with the help of my trend channel, I can get the various fractals of the market. This is the end of the third wave. So this is the first wave, the second wave, the third wave, which ends at the upper end of the trend channel, the fourth wave, and the fifth wave. So guys, whenever you have an uptrend, always picture a 5-wave pattern. Whenever you have an uptrend or a downtrend, it unfolds in a 5-wave pattern. So this is the first wave, second wave, third, fourth, and fifth. So at the end of that uptrend, what comes next are two scenarios. Either you have a retracement, which is an ABC pattern that leads to a continuation of the uptrend, which is a 5-wave pattern that breaks structures. So the first scenario, you have an uptrend, a retracement, which is an ABC pattern, and a continuation of the uptrend, which is also a 5-wave pattern that leads to the break of this structure. The second scenario that comes next after an uptrend is a reversal. So after you have an uptrend, which is 1, 2, 3, 4, 5, what comes next is a change of direction of the uptrend. So it's a reversal. So a downtrend comes next. So this, in this case, this is called a reversal, and it leads to the break of the whole structure. So this is a reversal. So the first scenario is an uptrend, a retracement, and a continuation, or you can get an uptrend and a reversal. In this case, what we have is the 5-wave pattern, which is the first wave, second, third, fourth, fifth. So this is the first wave, second, third, fourth, fifth. So what could come next is either a retracement or a reversal. For the case of Ethereum, if we get a reversal, that will lead to the break of structure, of this structure below, down here. So, and that means that Ethereum has crashed. On the second hand, if you get a retracement, there just be a minor pullback and a continuation. Now we treat Ethereum as retracement and not reversal, because I don't believe Ethereum is going to crash due to the number of investors that have invested in these assets. So if this is a retracement, what to expect is an ABC pattern, which is an ABC pattern. And for the A wave could either be a 5-wave pattern or a 3-wave pattern. The B wave is always a 3-wave pattern, and the C wave is always the 5-wave pattern. So our center of focus is on this C wave, which will be a 5-wave pattern, and at the end of the 5-wave pattern, what to expect next is a continuation of the uptrend. So what we had was a 5-wave pattern, a retracement, and the continuation of the uptrend. So our goal right now should be towards looking for buying opportunities, but that will happen at the end of this 5-wave pattern. So we have to go down to the lower time frame and count the fractals of this wave down here. I would expect a 5-wave pattern, and at the end of the 5-wave pattern, that will commence the uptrend. But before I go down to the lower time frame, before you think of buying an asset, you have to buy at area of discount and not premium. When I say area of discount it means you buy where the price is cheap and not where the price is expensive. And you can use your retracement, you can use your Fibonacci retracement tool to get area of discount and area of premium. So area of discount is like from anywhere from 0.5 downwards. Anywhere around this region will be considered the market being cheap. So at this area down here, downwards, the market is cheap at this area. From 50% upwards, the market is expensive. So from there downwards, the market is considered cheap. From there upwards, the market is considered expensive. If you're thinking of buying, and since it's a retracement, at the end of a retracement, what comes next is a massive bullish trend. You should be looking towards look for buying opportunities within this box. I could see that at this area down here, this region down here, this was a protected low in the market. They had a lot of stop loss placed at this area. And secondly, you have a lot of retail traders that place a sell stop at this area. So it means that there's a lot of money resting around this area down here. So what happens is that the market is going to come down here, take out the money resting around this area, and use this liquidity to go upwards. So it's going to come out and come down here. A lot of retail traders that put their sell stop down here, it will trigger their trades, take them out, and go the opposite direction. Institutional traders such as banks, large financial investors, and all these guys, before they took a buy trade down here, they first of all short the market now for them to get a very good entry into the market before buying. So they have an open position that was at loss. Even though they were in profit down here, they still had an open position that was at loss. So what we think they're gonna do? They're gonna, like, when they've got to the target location, they're gonna manipulate the market downwards towards closing their open sell position down here, and that's what you have down here. So, but before I conclude, I have to go down to the lower time frame. I have to go down to the weekly time frame to count the fractals down here to know what's happening. So we'll go to the weekly time frame. I'm to expect a 5-wave pattern. So go down to the daily. So already I could see this, the first wave, second wave, third wave, fourth wave, and the fifth wave. So guys, what does that mean? It means we're already in an uptrend, and this was the area of liquidity it has to take out. We're already in an uptrend. This is an uptrend down here, so it has to take out the money resting above this area down here. So what comes next is there's the first wave, second wave, third, fourth, and fifth. Use the A, B, C correction. So if you're thinking of buying this asset, I would say you buy on the break of this structure down here. So that's at 1645.94 with your stop loss at this area. This for investors, you can say, okay, if the market goes below this, I'm going to let go of my trade. So if you're investing, not for traders, this is for investment. So what could say, the market gain a bit of support at this area here, and it's going heading upward down to this level. So you can take your buy trade, and your profit target will be at, if I go to the weekly time frame, your profit target will be at this level down here. Which is at 4850.003. Why that's at this level? Because at this area, this was where the bank shut the market, so they had their stop loss placed around here, and you also have some buy stop. A lot of retail traders, that see this as the area of resistance, and hopes that when the market breaks through here, that buy trade will get initiated. So what happens is that you have a lot of money resting above this area. And what bank usually do is that bank takes out internal liquidity and head towards an external liquidity. So this is an external liquidity because this led to the break of several structure down here. So there's a lot of money resting down here. So the banks will just target this external area of liquidity, which is like a pool of money. So if you place a buy trade now, this should be your first target, should be at this level. In summary, this is the first wave, second wave, third wave, fourth wave, and fifth wave. And this is a correction, which is a retracement. This is a retracement, which is an ABC pattern. And this C wave is the 5-wave pattern, which we already counted, and this which ended down here. At the end of the C wave pattern, what comes next is a massive bullish move. But this should be your first profit target level, which is at 4600, thereabout. This area, this region should be your first profit target level. So if you take a buy trade, you can say, okay, I'll wait for the peak of this structure, or you can take a buy trade right now, and your stop loss will be at this level. And that's it, guys, for today's video. If you like what you watch, don't forget to comment, like, and subscribe. Thank you, and see you guys in the next episode.